Hi, everybody, and thanks for tuning in to this video on how nonprofits can be doing cash management even better. I'm thrilled to be joined today by Dennis Gogarty and Mark Murphy of Raffa Investment Advisers. Dennis, Mark, welcome. Thanks for joining me today.
Thanks, Rick. Thanks for having us.
No, thank you.
Great. Dennis, before we dive into today's topic, can you tell us a little bit about who is Raffa Investment Advisers?
Sure. Thank you for asking, Rick. We are an independent investment advisor firm. We were created in 2005 as an affiliate to a large public accounting firm, specifically to manage reserves for nonprofits and associations. Our mission at that time and remains empowering nonprofits and associations to make better informed financial decisions. Education is one of our core values. We work hard to learn and share best practices within our community. We currently manage just over $1 billion in assets. That includes about 130, a little bit more distinct nonprofits. And within the last 6 to 9 months, cash management has been far the most pressing and the most profitable issue facing our clients. And we look forward to discussing that today.
Great. Thanks, Dennis. And as you were saying, cash management seems to be more important now than, well, it has been in over a decade. So let's dive right in. I mean, cash is cash, right? So why is it so important to be managing cash assets more actively now?
Right. Well, it's more important now than it's ever been, at least in recent history. And it's so important because of the significant financial opportunity that's present today. You know, as pandemic fears eased, the economy boomed, and inflation soared. You know, we all suffered as the costs for everything increased. But the bright silver lining is that savers and conservative investors can now earn 5% or more on cash.
Now, it sounds like a great opportunity, but you also mentioned inflation in there. So is there something that people should know as well when it comes to inflation, and if they were just, keeping their cash in the same checking account that they've had it in the last few years?
Yeah. I mean, so not only is there this big financial opportunity, but there's also this pressing need to be earning 5% in order to maintain the purchasing power of those dollars and keeping pace with inflation. So it's really that convergence. It's a big opportunity that's there for the taking, and it's important to take that opportunity to make sure that your dollars are maintaining their purchasing power.
Right. Well, now, as you know from working with nonprofits for so long, there are a lot of nonprofit executives out there who would be nervous about moving any operating cash out of their checking account. They may not have a lot to put into a reserve. They may have very little to put into a reserve. But what would you say to that nonprofit executive who's balancing out the risk and reward here?
Yeah, well, I would encourage them to understand the opportunity that's in front of them. We certainly understand that change is tough, but given the dollars right now and the fact that, as is often the case with investing, the most effective solutions are relatively simple, and Mark's going to go into more detail about that.
Right. Now, Mark, we've talked a little bit about the why people should be looking into this. So let's talk about the how. What's the first step if a nonprofit is looking to take advantage of these higher yields?
Yeah, so the first step is determine how much cash you need to keep on hand in checking to manage operations. So that's definitely going to vary from organization to organization, but likely 2 months of budget would be sufficient to meet cash needs at most organizations in our experience. And then given the ease of moving funds back and forth, that's what allows that 2 month number to work. I think a lot of organizations would think that might be too little, but it's very simple to move funds back and forth, and it enables you to take advantage of those higher yields.
Right now, what sorts of cash management options have you been recommending recently to nonprofits?
Yeah, so there's a variety of good options out there, and it really depends on the timing and likelihood of cash flows. So currently, we're using money market funds, CDs, treasury bills, and then mutual funds and exchange traded funds to invest cash assets for clients. We've noticed a lot, actually, in particular, moving from funds they might hold in a money market account over to a money market fund and an account we might manage because of concern about FDIC protection for that money market account or just better yields. Often we're seeing money market accounts not having the same yields as money market funds. But at a high level, there are a lot of options out there, and a good advisor could customize a solution for your organization to make sure you're maximizing your assets.
Right. Now, can you talk a little bit more about what's involved in working with an investment advisor and why, in some cases, it might be better than working with the bank?
Yeah, so there'd be a couple things. So on the operations side, you would need to set up an account with a custodian that the investment advisor would then oversee and manage. And that would be then linked to your checking account to allow those transfers back and forth to occur when you need dollars and when you have excess dollars in your checking. And then on the portfolio management side, you'd provide an advisor with financial docs for them to review so that they can have an in-depth discussion about your cash flow expectations. So they get an understanding of your month-to-month, year-to-year change in cash on hand. And that can allow them to develop an investment policy statement, which would then govern how those dollars get invested. And then they can recommend a customized portfolio to meet your needs. And so an advisor, I think, also just generally has a little bit more flexibility of investment options. Typically, banks a little bit more focused on CDs, money market accounts. But certainly both groups can be solutions. If you have a good relationship with your bank, that could be an option. It's just frequently the advisors have more investment options and as a result, more flexibility to deliver solutions for nonprofits.
Great. Thanks, Mark. Now, you mentioned needing an investment policy statement. Probably some other things would be good to get into place if an organization did want to go this route. Can you and Dennis talk a little bit about any resources that you might have for nonprofits who might be interested in learning more?
Yeah, sure. First, Rick, I would point out that we authored a cash management article, a link to which is embedded in the video description. So I would start by reviewing that. And then also you can visit our website, which is raffaadvisors.com, and you can find sample cash or operating reserve policies. In addition, you can see the results of our peer benchmarking survey. It's called the Study on Nonprofit Investing. And we've asked lots of different things, but among them are asking nonprofits about their cash management and short-term investing policies and practices. So you can learn from that. And we're here as a resource as well, for any nonprofit looking for a partner in managing their funds, or if they just have some questions that we can answer, we're delighted to help in any way that we can.
Well, Dennis, Mark, thank you for joining me today. Thanks for sharing your wisdom both in this video and in the accompanying article. And we hope these resources are helpful for nonprofits in putting their cash to work as best they can. So Dennis, Mark, thank you again.
You're welcome, Rick. Thanks for having us.